Hi there, you're watching Market Cafe on ET now with me, Shreyanshi Singh and Priyanka Uppal, and over the next 1 hour, we'll take you through news and updates from within the country as well as across the globe, tell you which stocks you should be keeping on your radar as well. But first things first, let's take a look at the Wall Street, and it doesn't look like with the earnings season gaining steam, it doesn't look like it was a good day coming in for Wall Street.
Absolutely. In fact, Shreyanshi, morning, if you see 7 out of 10 earnings which are reporting numbers there, they are reporting good set of numbers. But then what is that has taken the mind space of US traders is higher for longer interest rate. Yes, that's the fear that has taken the mind space of the US traders, and that's what we saw yesterday also. Now, what exactly happened that US indices, they gave up some of the gains that they had built, and these were the strong set of gains that they had built up over the course of time, at least from the last week, what we saw, which was one of the best winning week for US markets also. Now, Dow and S&P both lost yesterday. In fact, S&P that slipped 0.18% to close at levels around 5,800, above 5,800. Dow also lost around about 340 points to close with a cut of 0.8%. The level that indices closed was 42,931. Now, this has clearly snapped a 3-day run of winning sessions. Nasdaq was the only outlier because that had risen 0.27% and the index closed precisely at 18,540. Now, this fear was clearly visible on some pockets there. Consumer and home builder stocks were among the biggest losers yesterday. Now, fear about higher for longer interest rate that has crept up in the stocks like Target, which is down about 3.8%. In fact, Builders First Source, that was also off 5.5%. And clearly, this was also visible because state of the economy is very resilient, and now traders have this fear, market experts have this fear that is the interest rate going to be, are they going to be aggressive rate cuts the way we saw in September meeting? And it was clear on bond yield move. 10-year bond yield, that jumped again, rising nearly 12 basis points to close at 4.19%. Now, earnings will be very key this week also. 1/5 of the S&P 500 companies are set to report numbers, and among them are the major ones like Tesla, Coca-Cola, and even GE Aerospace. So far, the earnings are a good bag from US at least, not as what we saw in Indian markets. But then what is creeping amongst the fear that has crept in is about interest rate scenario. And we'll get you the Fed's comment also. Kashkari also made a comment on it.
Absolutely. But first, let's take a look at what crude and gold did. Then, firstly, let's take a look at US crude oil, because when you take a look at US crude oil, you're looking at a jump coming in of just about 2%. So, reclaiming some of those losses from last week's steep sell-off is where crude was at. The US benchmark, of course, finished last week more than 8% lower as traders increasingly believe Israel-Iran tensions will not lead to an oil supply disruption in the Middle East. When you take a look at WTI, the kind of move that you have is an uptick of about 1.9%. So $70 per barrel thereabout was where WTI was at. When you take a look at Brent as well, similar moves coming in for that one as well, because 1.6% uptick is what you're looking at. When you take a look at Brent's December contract, $74 per barrel is where that one was at. But year to date, of course, that global benchmark has declined more than 3%. Prices, of course, rose after China cut its benchmark lending rate. Now, you do have Saudi Aramco CEO Amin Nasser also saying that he remains fairly bullish on demand in the world's second largest economy. So that's some key commentary coming in when it comes to the oil market. And of course, the focus has shifted back to supply and demand fundamentals, with consumption in China also softening as supplies are expected to rise. So that is the kind of move that you have on your hands when it comes to crude. When you take a look at gold though, gold took a breather after surging to those record high levels as higher US Treasury yields as well as dollar offset support. When you take a look at growing uncertainties surrounding the US presidential election or the Middle East war, at this point, the fundamentals were a little bit tilted in the favor of looking at higher US Treasury yields as well as dollar. So that is something that we're looking at when it comes to gold taking a breather as of now. But let's stay with commodities then now. Citi Research has gone ahead and raised their 3-month forecast for gold prices, citing further labor market deterioration as well as rate cuts by the Federal Reserve. The bank, of course, upgraded its 3-month gold price view to $2,800 per ounce from $2,700 previously. Now, adding that its 6 to 12-month forecast is $3,000 as well. Now, it also revised its 6 to 12-month forecast. When you take a look at silver prices also upward to $40 per ounce from what it was previously, which is $38 per ounce. And additionally, they're also expecting the yellow metal to rise in the scenario that oil spikes on near-term geopolitical escalation. That's not all, though. They also said that oil fundamentals point to $60 per barrel average prices in 2025, but that the potential for very near-term geopolitical escalation in the West Asia is also high. So that's key commentary coming in as far as Citi is concerned.
All right, so that was more on the crude and gold, but then let's get you some key comments from the Fed officials. That's something to ponder on. Also, Federal Reserve, the four policy makers, they expressed their support for further interest rate cuts, but appeared to differ on how fast or how far they believe any cuts should go. San Francisco Fed President Mary Delle, she said that she feels that Fed policy is very tight and does not believe that a strong economy, as long as inflation continues to fall, should keep the central bank from continuing to reduce rates. In fact, Shemed, Logan and even Kashkari, they cite that the strength of the economy and an uncertain outlook, that they expressed a preference for going slow, using words like modest and even gradual to describe their views on the right pace for the rate cuts. Now, the remarks of course, they provide a small taste of what's expected to be a broad but closed-door debate of the appropriate path for policy at the upcoming policy meeting on November 6th and November 7th.
Alright, definitely a meeting that we're keeping an eye on, but keeping it going with the macro narrative, then International Monetary Fund's Managing Director Kristalina Georgieva said she expects higher prices to stay for longer, adding economic pain, that which also stems from slow growth and higher debt. Added that the world economy is performing reasonably well, but cautioned that concerns still remain, while she did not specify. Said that growth is expected to be above 3%. Remember, IMF's 2024 global real gross domestic product growth forecast is at 3.2%, and for 2025, it also stands at 3.3%.
Okay, now shifting focus to to China now. China has unveiled a set of export control regulations for the so-called dual-use item. Now, these are the items or the goods or technology that can be used for civilians as well as for military purpose, ahead of President Xi Jinping's trip to Russia. Now, the regulations come amid intensified US sanctions targeting Chinese companies, which the US deems have been supplying dual-use goods such as drones. This is to aid Russia's war effort in Ukraine. The Chinese State Council, in a statement, said that the measures effective from December aim to safeguard national security as well as interest and promote global cooperation.
Alright, moving on, then the US presidential race has entered a crucial phase with less than a few days until Election Day. After President Joe Biden unexpectedly dropped out from the White House race in July, Vice President Kamala Harris stepped in to lead the Democratic campaign. Now, how growing momentum reshaped the direction of this closely watched race? Here's a special report on the rise of Kamala Harris.
Let's leave it.
Former Attorney General, former Senator, and the first woman Vice President of the United States, Kamala Baby Harris. Kamala Harris's ascent has been as steady as it has been phenomenal. Her ticket to the top post, rallying Democrats and rattling Republicans, led by Donald Trump. Democrats began to rally around her as the key nominee, soon after Biden dropped out. But despite the rhetoric from her opponent, Harris is firmly in the race to win the White House, hoping to become the first woman ever to hold the top job. The daughter of immigrants, a Jamaican father and an Indian mother, Harris's journey from being a district attorney to becoming the presidential pick for the United States elections has been one of many firsts. Her thoughts on healthcare, climate change, justice reform and immigration have helped her gain political prominence. But it wasn't until 2020, when she received record-breaking votes, that Harris broke the proverbial glass ceiling and made a milestone in American politics, becoming the first black woman vice president.
She's very articulate. She has a very clear mind. But I think most of her arguments and her logic, it really goes in favor of people, very people-centric, and therefore most of the people immediately begin to relate to her. Her performance as the vice president was refreshingly good.
Over the years, Kamala Harris got flack for the influx of illegal immigrants and high inflation.
We choose freedom. the freedom to be safe from gun violence, the freedom to make decisions about your own body, where no one is above the law. We believe in the promise of America.
The large immigrant community in the USA immediately relate to her, and most of them will probably vote for her. She has not really spoken too much on the economic policies during her campaign as such.
Leading up to D-Day on November 5th, many say to counter Biden's anti-incumbency, she's distancing herself from his legacy.
The entire Trump approach was formulated to fight Joe Biden. And so they want to make Harris exactly like Joe Biden. Kamala Harris was making it plain that she's not Joe Biden, that she has ideas of her own.
Even warming up to Republicans.
Kamala Harris wants Republican votes. She needs independent votes. And the Fox television interview was an attempt to reach out.
Bill, we're going to win. Let me just tell you that. We're going to win. And I'm not saying it's going to be easy.
People in the USA would probably still want to see a Native American, a white American, in the White House. And that's the reason I called that Barack Obama was an exception.
I've known her a long time indirectly, not directly very much. And she was always of Indian heritage, and she was only promoting Indian heritage. I didn't know she was black until a number of years ago when she happened to turn black, and now she wants to be known as black. So I don't know, is she Indian or is she black?
Even though the contest between Harris and Trump is a tight one, she has a thin lead. Eventually, the candidate who's able to swing the battleground states, Arizona, Georgia, Pennsylvania, Nevada, and Michigan, will end up holding the key to the White House.
So that's how the rise and shine of Kamala Harris looks like. Moving on, Prime Minister Narendra Modi will attend the 16th BRICS Summit in Kazan, Russia. It's a two-day meet. The theme of this edition is strengthening multilateralism for just global development and security. PM Modi is expected to hold bilateral meetings with his counterparts from BRICS member countries. Bilateral talks with Putin and Iranian President Masoud Pezeshkian are also likely. The Prime Minister is expected to speak on the ongoing West Asian conflict as well as the Russian-Ukraine war. Remember, this is the second time PM Modi will be visiting Russia this year.
Well, absolutely, and let's keep it going with some more updates, and let's get you some updates when it comes to India and China, because they have finally reached a petroling agreement over the line of actual control. Now, Foreign Secretary Vikram Misri highlighted the numerous rounds of talks it took to finalize the pact as well. Remember, this comes ahead of the crucial BRICS summit, which PM Narendra Modi will take part in. In fact, we also caught up with Ashok Sajjanhar, a former ambassador, to decode the implications of what this agreement really means. Let's go across and listen in to slice of what he had to say then.
So as far as the disengagement and the patrolling is concerned, that has been resolved. And now where we'll come to is in terms of de-escalation and de-induction of our forces. You know, we have 50,000-60,000 of our troops that have been stationed there. So also the Chinese who have been stationed there for the last 4 years. They have been during the winters also, which can be very troubling, which can be a very challenging time to be there. But our troops have managed to stay there. So if the de-escalation and de-induction takes place, at least they'll be able to come back. But even more importantly, I think bilateral trust has suffered so badly as a result of what China did in April 2020. It has sort of, literally torn the agreements of 1993, 1996, 2005 confidence building measure agreement. It has torn it to shreds and moved in there. So I think to build that trust will require a lot of work.
All right, with this, we stay for a short break here. When we come back, we get you the cues from Asian market. GIFT Nifty looks like up for a good start right now. Let's see how the cues shape up. Don't go anywhere.
Welcome back. Thank you so much for staying tuned in. Well, let's take a look at the cues coming in from the Asian markets. Firstly, let's take a look at ASX 200, downtick of about 1.4%. There on your screens is where that one was at. Let's also take a look at South Korea's Kospi, because that is also in the red as we speak. Let's take a look at Kospi then on your screens. 0.6% downtick coming in for that one as well. Japan's benchmark Nikkei as well in the red at this point. Let's take a look at exactly where that is at, because 1.4% downtick is also what you have on your hands when it comes to Nikkei as well. Lastly, let's take a look at Hong Kong as well as Shanghai, because those are the ones that are not doing all that much, because when you take a look at Hang Seng in the green, 0.2% uptick is where that one was at, and flat for the positive bias. When currently a negative bias is where Shanghai was at. Previously, it was obviously a positive bias. But when you take a look at all of the Asian markets, you're looking at a mixed bag largely, because ASX 200, Kospi as well as Nikkei were the ones that were in the red. And when you do look at Hong Kong's Hang Seng, that's the only one currently holding on to that tinge of green at this point. Of course, back home, we shut shop around the 24,780 levels. And currently what is being penciled in is a rather muted start, at least when you take a look at what the Nifty implied is penciling in. So that's how the day seems to be shaping up for us.
All right, so that's the action coming in. So Asian markets, weak set of cues coming in from even US markets, and Asia markets also mirroring the moves which they've got from US markets now. But then let's get you how the lineup looks like for TM. We've got an action-packed lineup, of course, earnings coupled with festive fever. So at 9:20 to beat the street, we go to gather views from Ashwini Agrawal, who's the founder for the Meta Advisors. In fact, 9:30 we get you the earnings wrap, and Ajay Kawal will be joining us, MD and CEO for Jana Small Finance Bank. Let's understand what is his view on the industry trend and the kind of outlook he gives us on the numbers, especially after the private banks numbers coming in. 9:40 we get you Chetan Ahaya, who's a Chief Asia economist from Morgan Stanley, to help us understand how FIs sell off, how long it looks like FI sell off, and the flows going to China. What is the picture actually shaping up? At 9:55, we get you view from Parle Products senior category head Mayank Shah on the festive cheer and the festival season ahead. And of course, 10:30, the D-Day for Hyundai Motor India. We get you Unsu Kim, who's the MD, as well as Tarun Garg, who's the COO for Hyundai Motor India. That's one event which the whole market, and not just market, in fact, globally, the participants are eyeing on.
Alright, and that's a power-packed lineup for you right there. But time now to take a look at news for the hearing impact.
Welcome back. You're watching Market Cafe. Now let's get you some economic news back home. And as per the latest RBI bulletin, the Indian economy is seeing resilient as well as stable growth outlook. And this is majorly on the back of the strong consumer spending, as well as from both private investment as well as the other pockets. Now, the better festive spending, this is what is being penciling in. What are the other growth sectors for the Indian economy? Anjali Palot is here with highlights from RBI's monthly bulletin. Anjali.
RBI has released its October Bulletin, in which they have said that the first half of 2024 has seen the global economy remaining stable, with inflation easing and household consumption increasing. In India, despite geopolitical tensions, it's the domestic engines that have kept the growth stable. Going forward, RBI has said that private investments are showing some encouraging signs, and consumer spending is also expected to increase as we approach the festive season. RBI has said that during this year's Dussehra Diwali, they expect to see a 25% increase in spending as compared to last year, and this will largely be led by offline sales. They've made some observations about quick commerce companies, saying that they are changing consumers' spending habits, where consumers are becoming more discerning, more price conscious, and more channel agnostic. Commenting about microfinance institutions, the RBI has said that the microfinance sector appears to have been driven by the lenders' drive to disperse loans rather than borrowers' demand. RBI has also said that the stage appears to be set for mega IPOs to shine this Diwali.
Alright, there you go then. That was about RBI's latest bulletin. Thanks, Anjali, for that. Moving on then, the government has rolled out Imram Portal 2.0. The portal aims to integrate key central schemes, the likes of One Nation, One Ration Card, MNREGA, as well as more other schemes like that. The aim is to extend the benefits of social security schemes to unorganized sectors as well. In fact, Prakash is standing by with more details. Prakash, tell us a little more about this then.
Yeah, the Ministry of Labour and Employment has launched Imram Portal 2.0, where all the platform aggregators like Swiggy, Zomato, Amazon, Ola, Uber can register themselves. All gig workers will have to register themselves at this portal to get benefit of social security schemes launched by the government, and the government is also trying to create a unique ID for gig workers to enable them to get benefit of health insurance coverage, along with all the benefit of social security schemes launched by the government. In addition to that, all workers coming from unorganized sector will have to register themselves at this portal to get benefit of social security schemes such as One Nation, One Ration, Manrega, National Career Service, PM Shram Yogi Mandhan, etc. A very significant development coming in at the government is trying to expand the ambit of PM Shram Portal with an objective to cover more number of workers coming from the unorganized sector. As you are aware that the government had in 2021 launched Shram Portal, and so far more than 30 crore workers have been registered themselves at this portal. And now Ministry of Labour and Employment has come out with the second version of Shram Portal with some additional benefit with an objective to cover more number of workers coming from the unorganized sector.
All right, thanks very much, Prakash, for all those details. But the key highlight of the day is going to be Hyundai Motors IPO. Now, the listing, all eyes are on the listing because the kind of subscription, and of course, let's not forget it's a 28,000 crore IPO, nation's biggest ever in the history of Indian markets, and retail participation, that got a very lukewarm response. Rather, QIB, that got a high response, and the entire QIB was compensated in the last days, but then only the 50% of the retail was subscribed, the quota which was reserved for retail subscription. QIB was subscribed more than 6 times, close to 7 times actually. Now, what is street penciling in? However, before the listing yesterday only, if you see the grey market premium, that saw a rebound yesterday, just a day before the listing of the issue. But then, if the price band if you have to believe with the price band, if it's listed around 1960, let's understand. Let's get you some screens also. In fact, this is a very interesting data point that our research team has also got up for you. That if it's it gets listed at a market cap of 1.6 lakh crore, if the issue prices it settles at 1960, then EV to EBITDA for FY25 it's trading at 17.5 times. For FY24, PE could be 26 times, and of course forward would be 18.3 times now. Now, if it lists at 10% discount to the issue price, that is nearly 1764. At that time, what would the market cap? It could be 1.4 lakh crore. Whereas on the upper band, if it starts to list at a premium, and that could be a scenario because the kind of rebound we've seen in GMP prices just a day before the issue. If there's a chance of listing at a 10% premium or maybe 20% of premium, the market cap, with a 30% of premium, it could list with a market cap of 1.9 lakh crore. That means simply 22 times of its PE, FY26 PE ratio. Even Hyundai India, of course, a key strength company, no doubt about it. It's the second largest player in the passenger vehicle segment, and of course the kind of high margin, the SUV segments that commands for, and the company has a good mix of its higher margin exports. They are set to launch their EV models also. So all the fundamentals are intact, but there was a slow response, a lukewarm response from retail investors on certain concerns, like the valuations were very high, and in fact, there's a slowdown in overall slowdown appears to be in the entire festive demand, entire auto segment demand. That's what is also weighing on the in fact, the listed players, as well as there could be some sort of lukewarm or maybe some sort of soft response. But then if you look at its valuation comparison over, the market cap, even its FY24 EV to EBITDA ratio, if we compare it with its peers like Hyundai, Maruti or M&M, we get you that screen also. In fact, M&M would be 22.6 times, whereas its FY26 EV to EBITDA is 17 times, and Hyundai is bigger than, it's larger than Maruti and even M&M. It's higher than both of its peer also. So the valuation concern, slowdown in festive demand, as well as the overall, the auto space is going through a slump or maybe a slowdown. That appears to be weighing on the response that we got from the retail investors. But let's see how it lists. The GMP has surprised actually.
Well, absolutely. Let's see how the listing goes. But let's also take a look at what the brokerages then had to say, because when you take a look at what Nomura then had to say, they're initiating a buy with a target price of 2,472. They're talking about how the company is riding on style and technology, and premiumization is also a key growth lever that they see when it comes to Hyundai Motor. They're also talking about how there's a long runway for the Indian car industry. So that is also something that they're highlighting, and they also see the company being poised for healthy long-term growth. So that is the view coming in from Nomura. In terms of key catalysts, of course, they do talk about the capacity expansion in the second half of the year. They're also talking about the launch as a key catalyst when it comes to Hyundai. Let's also take a look at what Macquarie then had to say, because they're also initiating an outperform with a target price of 2,235 rupees. And in terms of the PV premiumization, that is something that they're highlighting along with the growth pure play. In terms of a key catalyst, the market share in the core segment has stabilized. That is also the word coming in from Macquarie. And they're also saying how the favorable portfolio mix as well as premium positioning is something that is going to be a key catalyst when it comes to Hyundai, and parent capabilities as well as market share upside risk is also something that Macquarie is highlighting. So that is the word coming in as far as brokerages are concerned.
All right, so Macquarie is clearly saying that it can command higher PE multiple. Let's see how this one lists today. But then let's get you a very interesting view from Milind Karmakar, whom we caught up with yesterday, and he's a director and fund manager of Dalal and Broacha portfolio, and he said that he picks out companies in the young, youth as well as a mature phase. Listen in to what his rationale exactly is in behind the stock picking.
Young and small, high growth, matured curve, and then fading into the decline curve. Which are the companies which, to your mind, fit in? And it's like, not even if you're not invested in, we can talk about it just to establish a point for our viewers. In the first phase, young, agile, and high growth.
So probably companies like Zomato could be in that phase.
Okay.
Then I don't see, frankly, many companies as of now in that phase. There will be, of course, they will be coming in. But as far as I can think about, probably someone like a Zomato is in that phase. I'm not considering most of the engineering companies. Some of them are, frankly, but they have a limited lifespan. So they are not, their growth phase is fast, but you can say fast and furious, but it ends in a short period of time. 5 years, 6 years. They are not companies which will benefit significantly by mega trends.
Okay. Second phase, which is that vibrant and relevant. That's like they call the youth stage. Where are they? Which are those companies which are in the youth?
So I still believe that someone like a Trent and DMart are in the youth, and they have still a long way. Yes, they are.
Okay.
And the reason is that, you know,
You're using the word youth for Trent and DMart.
Yes, because there are two things, for simple reason that take for example Trent, they keep innovating. Now for example, they are pushing for beauty products. Now the issue is that initially when I invested in Trent, one of the thoughts which was in my mind was that Simon Tata, who created Lakmé, the only brand probably in India which was extremely successful, and till you came to know that it was an Indian brand, you would not have believed it's an Indian brand. And they are again getting into beauty. LGDs, second, again something completely new, but clear focus on that. I mean, they have just started, but it will take a long time. But so these are the type of, so as long as the company keeps innovating itself, limiting itself to the structure in which it conducts business, I think those type of companies will do well. Even DMart for that matter. Yes, they have not been successful when it comes to apparel, but at the same time they are rethinking. Like they are starting pharmacies, I'm told, within the stores. That could be a very interesting.
Walmart
has done well in pharmacies. So whether it's pharmacies or I think in a couple of stores they have also started quick service restaurants. That's also could be interesting. So they are within the limitations or within the segment in which they are innovating. So as long as the company continues to innovate, I would think that they are into a youth phase.
Okay.
Alright, then time for a very quick breather on the show. When we come back, we'll take a look at the list of stocks that you should be keeping on your radar as well.
Welcome back. You're watching Market Cafe. Now, let's get you more from the FNO snapshot. Of course, FIs have been a big seller so far. They've already sold more than 82,000 crore in the month of October only. Ansh is here to get us the detail from the FIs and DIs action from yesterday's trading session. Ansh, over to you.
Right, and like you said, that FI have been on a selling front. They are bearish in index future market as well, along with cash market. Index future, we are seeing that they have covered their long by around 3,300 contract. They have added around 2,300 shorts. Net to net, we are seeing reduction of around 5,700 contract, due to which the total long position stands at around 32.9% currently as compared to 33.6%. And this is the 92 session low level, indicating they have been the most bearish position in the market in last at least 3 to 4 months. Now, if you talk about retail position, then they have covered around 2,800 long. They have covered around 16,000 short. So net to net, we can say that there is an addition of around 13,000 contract, due to which the total long position has crossed that 64% mark, and this is the 95 session high, indicating they continue to be bullish in the market. Now, if we talk about Nifty, then index continues to hover around that key support zone of around 24,750, 650 level. This is the same level where we saw good support in bonds in the previous month as well. So this is the level which can act as a good support in coming sessions. Whereas on upside, if you'll see, then on option front, we are seeing very strong call writing happening at 25,000 psychological mark, and this is call writers favorite level, because from last 4 sessions they have been strongly writing call at this strike price, indicating strong resistance around this level. Now, if you talk about Nifty Bank, the Nifty Bank actually continues to hover around its 50 DMA from last 12 consecutive session, indicating consolidation. Whereas if we talk about option front, then we are seeing call writing happening at that 52,500 strike, indicating resistance around this level. Let's switch our focus to stocks in focus now, and we are seeing significant long build-up happening in Bajaj Auto and MCX, where short build-up for Tata Consumer and ABB India. So keep an eye on the stocks and levels.
So much for joining us with that roundup then, but we also have Jinay who's joining us in the studio with the stocks to watch roundup. Which are the stocks that we should be keeping on our radar then?
Well, definitely, let's start with the results. We'll look at Bajaj Housing Finance. If you look at NII, it came up about 13%, whereas the profit soared about 21%, coming in at 546 crores. Also, the disbursement remained flat, but the AUM saw a growth of 26%, coming up over 1 lakh crore mark. Moving on, Citi Union Bank, the company reported NII of about 8% improvement, whereas the PAT remained largely flat, improving 1.5%. But if you look at the NPAs, the GNPA decreased by 4.5% sequentially, whereas the NNPA also decreased by 9% sequentially. So that will be key to watch out. Also, Mahindra Logistics reported its number. If you look at the revenue, it grew about 11.5%, coming at 1521. But the EBITDA, due to the better operations and cost optimization, increased about 24% year-on-year basis, and the company also narrowed down on its loss, reporting at a 10 crore loss this quarter versus 15 crores or year-on-year basis. Ola Electric, another stock that will be in focus, as the company responded to a show cause notice from CCPA, where this told that Ola Electric, the company has resolved about 99.1% of the complaints through its mechanism. Also, Eicher Motors will be in focus, as the Royal Enfield has begun its operations in Bangladesh. The company has also set up a manufacturing plant in Bangladesh with a capacity of 30,000 units annually. Moving on, Sona BLW, another stock will be in focus, as the company has inaugurated a new plant for the driveline business in Haryana. And Shriram Finance, the company gets approval from RBI for their proposal of disinvestment or sale for the stake in subsidiary SHFL to the purchaser, which is an affiliate of Warburg Pincus. And lastly, Mass Financial Services will be in focus, as the company has partnered with UCO Bank for co-lending.
So these are the set of stocks, Janay. Thanks very much. So let's see how post the earnings, how these stocks react. We've seen up majorly, today the move which is coming in from on stocks is majorly on the positive, and the bearish notes also from the brokerage. Yesterday was a clear example. Now Gaurav is here with all the key brokerages on the stocks after the earnings, as well as a couple of stocks from real estate space also, what I see. Gaurav, tell us what all you have.
Well, yes.
First, let's begin our list with UltraTech Cement. We saw a weak set of numbers yesterday, and today we are seeing a pessimistic view coming up from brokerages. So we have got Goldman Sachs, who maintained buy rating but cut the target price to 11,720 rupees. What they say is that we saw weak profitability, but management is optimistic for second half of FY25. They say that UltraTech is the only buy in the cement segment. What they're saying is that price increase will be a key thing to watch out for, because there will be pressure when it comes to margins and as well as volumes in terms of the market share. Other than that, when we talk about Bank of America, they have also cut the target price to 12,300 rupees. What they say is that the worst of the profitability is behind us and we may see some recovery in second half. When we talk about Bernstein, now they have maintained market perform rating with a target price of 10,508 rupees, because what they say is that volumes were weak and at the same time they have given market performance as a rating because they think that stock is currently at a rich valuation. Other than that, when we talk about Oberoi Realty, now we have seen some underperform rating coming up from Bank of America with a target price of 1175 rupees on this stock. What they say is that when we talk about Q2 numbers, we have seen sales trajectory which is improving and they further await for some new projects to add up. What they say is that deployment of capital is going to be a key thing to watch out for Oberoi Realty. And apart from that, when we talk about Jefferies, now they have maintained hold rating but hiked the target price to 1900 rupees, because what they say is that company is planning to raise new equity, and we saw some jump because of the two products which are Worli and Goregaon project, and at the same time they are also optimistic about the new projects which are coming up from the company. Lastly, when we talk about Dr. Lal Path Lab, now Nomura has maintained buy rating and a target price of 3,720 rupees on this counter, because what they say is that they're expecting steady performance from the company. We have already seen that Q2 is seasonally strong and at the same time the high base was also there from the last year, so no surprises is what they're expecting, but a steady performance, and on back of this they have maintained buy rating for Dr. Lal Path Lab. So definitely watching out on all these counters on the back of the brokerage note that we received today.
Thanks, Gaurav, for that update coming in. Let's also take a look at Zomato, because we do have Zomato all set to report its quarterly results. Let's take a look at what is really being penciled in when it comes to this one. When you take a look at a consolidated basis on a quarter-on-quarter basis as well, revenue, there's an uptick of about 10% that we're penciling in at this point. When you take a look at profit as well, what we're penciling in is an uptick of about 3%. When you take a look at EBITDA, uptick there as well, 19% uptick is what is being penciled in when it comes to the second quarter on a quarter-on-quarter basis, and EBITDA margin as well is seen at 4.5% versus 4.2%. So that largely is the kind of expectation that we have when it comes to Zomato. Let's also take a look at the key monitorables that we do have for Zomato, because there's market share and gain or loss that we of course will be keeping an eye on. Order volume growth is also something that will be key to watch, along with the delivery charges expansion. That is also something that we should be keeping a close eye on when it comes to Zomato's second quarter results. And near-term EBITDA as well as dark store additions, especially when it comes to Blinkit, or something that we're watching out for when it comes to Zomato as well. Let's also take a quick look at what Brokerages then had to say, because when you take a look at what BofA then had to say, they're talking about how the company is looking to raise equity, and reports are also suggesting $450 to $500 million when it comes to this one. Competition uptick is also something that BofA is highlighting. In fact, they're also talking about how the company is scaling up other vertical as well. Lastly, let's also take a quick look at what Jefferies then had to say, because they're talking about how the QIP announcement is a surprising yet interesting move. So largely that's the kind of handover that we have when it comes to brokerages as well on Zomato.
All right, absolutely. You know, of course, the fundraise, that itself was a key trigger for the brokerages to sound more positive on Zomato, and they've given a target of more than 300 now. Let's see, but of course the market share and the delivery charges expansion, these will be the key areas for Blinkit also. One needs to watch out. But okay, and in fact we did caught up with Milind Karmakar also to talk about you know, the spaces that he really likes, and he mentioned that he picks out companies young, youth and mature phase also. Let's find out what is his rationale behind picking the stocks.
Young and small, high growth, matured curve, and then fading into the decline curve. Which are the companies which, to your mind, fit in? And it's like, not even if you're not invested in it, we can talk about it just to establish a point for our viewers. In the first phase, young, agile and high growth.
So probably companies like Zomato could be in that phase.
Okay.
Then I don't see, frankly, many companies as of now in that phase. There will be, of course, they will be coming in. But as far as I can think about, probably someone like a Zomato is in that phase. I'm not considering most of the engineering companies, some of them are frankly, but they have a limited lifespan. So they are not, their growth phase is fast, but you can say fast and furious, but it ends in a short period of time. 5 years, 6 years. They are not companies which will benefit significantly by mega trends.
Okay. Second phase, which is that vibrant and relevant.
Yeah.
That's like they call the youth stage.
Yeah, yeah.
Where are they? Which are those companies which are in the youth?
So I still believe that someone like a Trent and DMart are in the youth, and they have still a long way. Yes, they are.
Okay.
And the reason is that, you know,
You're using the word youth for Trent and DMart.
Yes, because there are two things for simple reason that take for example Trent, they keep innovating. Now for example, they are pushing for beauty products. Now the issue is that initially when I invested in Trent, one of the thoughts which was in my mind was that Simon Tata, who created Lakme, the only brand probably in India which was extremely successful, and till you came to know that it was an Indian brand, you would not have believed it's an Indian brand.
Alright, then with that, we're completely out of time on this edition of Market Cafe on ET Now. From me, Shreyansi Singh, Priyanka Uppal, as well as the entire team that put the show together. Thank you so much for tuning in. You don't go anywhere because the market takes all of the action forward.
There comes a time when your heart calls for you to arise. Plant your feet solid into the ground. Decide your own limits. And then break right through them. Become something more. It's my time to rise.